And NVIDIA earnings on deck. We are counting down to the chip giants report tomorrow. What investors should be watching and how they should trade the name. Plus, Tim's mega trade gets a boost. Shares of Novo Nordisk hit a 2-month high while one of our traders is eyeing the chart. And Karen's drafted a new deal why she is betting on the New York Liberty and what she thinks is next for the defending WNBA champs. I'm Melissa Lee, coming to you live from Studio B at the NASDAQ. On the desk tonight, Tim Seymour, Fano and Eisen, Dan Nathan, and Guy Adami. And we start off with a major market melt-up to kick off the holiday-shortened week. The S&P 500 soaring more than 2% to close within a stone's throw of the 6,000 level. The Dow surging over 700 points and NASDAQ jumping 2.5%. Yields pulled back. Bitcoin got a boost above $110,000 and the dollar rose. All that action after President Trump posted on Truth Social over the weekend that he would delay proposed 50% tariffs on the European Union until July 9th. News of those levies sank stocks on Friday and helping stocks a monster beat on consumer confidence. The May reading coming in a whopping 12 points above estimates. Do these things together give an all clear for the markets? Guy.
If I had been here on Friday, which I was not, I would have said, you know what, Mel, the market did not close particularly well. Yields are going higher. You have this long weekend. We traded down the 200-day moving average, a chance for an hour reversal to the downside. It doesn't look good. None of that came to fruition. We traded down the 200-day and bounced exactly off it. Yields are coming back in. So that augurs particularly well, I think, especially with earnings tomorrow, NVIDIA. I'll say this, though. The concerns I have not gone away. I mean, the European tariffs, it's not like there's some huge trading partner, so I don't know why the market took all sort of the relief that it did. But with that said, you know, if you get yields continuing to come in, especially with some of the comments from Besson over the weekend, that's encouraging for the market.
The things that I think are really fascinating here is as we go into NVIDIA tomorrow, we're going to talk about that. We've talked about it. That's all we talk about. But is that the NASDAQ is at almost a 6-month high on a relative basis to the S&P. So at least it's come back to kind of that level on a relative basis to the S&P from February. And then if you take it all the way back just a little bit higher, you're back to that July high. I'm not saying we're going to do it. I think there probably needs to be another test before you test higher. But it's extraordinary to me that the market leadership, and I know we're going to talk about international. I don't think that kills that international trade. But the market had a lot to go on today. Not only is the sentiment from the White House, and I think we've said this different times in different ways also, which is that I think the worst of the tariff rhetoric, I think, is behind us. Doesn't mean that the impact from tariffs isn't very much in front of us, depending on what we get. You had a bond market that was very cooperative. You had a bond market that not only included a very successful auction, a 2-year auction, which isn't more as important as a 10-year auction, but more importantly, in Japan, you had some announcements from their Treasury, effectively, that they're going to be issuing less on the longer end. That supported the bid to long-dated bonds around the world. A bond rally, I think, is very important for equities here, especially when you consider where we were at the start of last week. So a bunch of ingredients include soft data, consumer confidence for, 4-year highs in terms of the size of that move. That's pretty good. Mm-hmm.
Yeah, so let's go back to like that second week in April. You got to ask yourself, what was the market discounting then, right? And so we didn't have any reason to believe that the data was going to immediately get bad. Then we had earnings season at that point. Banks got out of the gate. It was just pretty good for the most part. As we got deeper into some more cyclical areas and then we got into big tech, everything seemed about fine. So let's kind of flash forward now to where we are right now. And I guess the question is, what are we discounting here? And I think you guys are right, Mel. You got me right in my grill a couple weeks ago.
It wasn't in your grill.
You were kind of in my grill, where you said the worst of the narrative, exactly what Tim just said. He's kind of taking your line and going with it a little bit. It's probably behind us for all intents and purposes. But I bring you to this whole thing now where things get really ugly at the end of the week because people are just kind of digging in and figuring out
because the EU stuff. And so the EU stuff, like, why do we sell off on the EU stuff? Then why not claw back those losses today?
Right.
It makes sense.
I get it, but we didn't sell off 2% in a straight line on one day, right? And so Tim's been saying this, the pain trade is higher right now, right? And so I get all that, but we're going to come in on a Monday and there's going to be a tweet on a Sunday and it's not going to do the thing that you think it's going to do because, again, it's kind of like the boy who cried wolf. Everyone knows the playbook, right? And so I am surprised that we opened up 1.25% and closed on the highs up 2% because you would have thought that we kind of get what's going on. That being said, we have GDP, we have minutes, we have PCE, which is what the Fed's.
I think that's their favorite indicator.
Preferred indicator.
Right, and there could be a whole host of stuff that happens this week which says, okay, well, maybe we should be kind of unched on the year.
Mm-hmm. What do you think?
Well, as Tim has mentioned before, the hard data has been constructive for lack of a better word. It's been okay. It's been lukewarm. It definitely hasn't been of concern. I do think there has been some volatility. Dan mentioned some of the earnings that came out. Let's not forget, the Apples of the world. Let's not forget the Foot Locker just had the takeout situation, but let's not forget Nike. Let's not forget, the companies that have been absolutely bashed for pulling forecasts. So you still have this overhang, and I think, yes, in the short term it's been addressed, and that's likely why we traded up higher. But I do get behind kind of Dan's assertion that it's like you really wonder what takes us higher. This seems like a situation where you can come out, say something absolutely ridiculous, then come back to normalcy, and the market trades higher on the back of that. I do think there has to be some end to that, because it just seems
like creating a problem which will then be fixed by the same person.
We don't even believe that there's a problem anymore.